Hi, folks. This is Lee with the Market Sense for the week of September 24th, 2019. The charts in this presentation are provided to us by Gettess from their Trade Navigator software. And in our weekly bond market chart here, you can see after this exhaustion week a week ago, a little over a week ago, we did get the reversal we were expecting up to the lower moving average, and they've continued a little further this week. This is a little bit surprising, not terribly surprising, obviously, because we were expecting a reality from the exhaustion week. But the resistance here, 161.22, could very well have held it, and it does not appear to be doing that. That leaves the next target up here in the 164, well, this is 164.09, but we're going to call it 64.08 up to about 24 for other reasons. That's a resistance area next that they might get to. The support, however, was around 159.18, and they've stayed well above that so far too. Now that could mean they're just excited enough that they're going to go higher. It also could also mean that they're just plain not going to get to either of these red lines and just sort of take it easy this week. They're getting buffeted by impeachment talk and things of that nature, but so far they just look a little more bullish than they have for a little while. And well, again, 64.08 and higher down to 59.18. Both of those are the critical areas for this week. They haven't been to either of them. I'm not sure they will, but especially the resistance is what we'll be keeping an eye on. Stocks, they have a bit of an ominous tone here. At least that's the way I look at it. First of all, in a very big picture, there's a lot of all classic chartists that would call this a potential head and shoulders forming here. This part right here being the head, this being one shoulder and the other being formed here. I've never been a big fan of those, but yeah, that could be what's happening here. What we do have is a little bit of a breakdown out of an inside week last week, and that often is the beginning of a move that can last for, say a month on average. The upside resistance here to start the move down was just above 30.13. They got to like 30.12 and a quarter, 30.12 and a half, something like that. Boy, that's probably close enough. You should say they got there. They could have easily held the 29.84 area. That's the green line in the middle here, but they don't appear to be doing that. That leaves the next target down here at, let's call it 29.44, the lower moving average. That's the next target. Doesn't mean they have to get there, but there are reasons to believe they could be potentially rolling over here. I've complained about the market being hard to analyze because we're one tweet away from being 20% higher or lower. We're also getting discussion of potential impeachment now, and nobody likes that. By that I mean the markets. They don't like the idea of change of any kind. So that anything that looks like impeachment is going to be a negative for the market, regardless of how they feel about the president or whoever might take over. But I see signs that this could be rolling over. And again, that's not a prediction. It just means that the indications are there. If they were to turn back up and take out these highs, which is definitely still possible, the indicator down here, the momentum indicator, would turn positive and everything would look right in the world anymore. And this wouldn't look like a head and shoulders anymore because they'd be going to new highs. So, it wouldn't take much to change this picture. But at this moment, it probably wouldn't be a bad idea to be looking for reasons to be short. Just remember, it wouldn't take much to reverse them back up, so keep your stops kind of tight. So that's what we've got for you today. I hope you can find something profitable to get you